Yo, what's up everyone? In this video, I want to talk about the supply and demand strategy. We're going to review some trades that I took to end the week, and we're going to review some trades that I took in my Discord, along with some lessons backing each setup, so we could use those lessons to prepare for future trades, good and bad. So supply and demand is very powerful if you use context with it, and if you leave your emotions out of the picture. Before we do begin, if you are new here, I definitely recommend you to follow me on Instagram at Investortrade. I post daily trading recaps on here and very good trading tips and tricks that you're really not going to find anywhere else. The link to this will be in the description below. You're definitely missing out if you aren't following it. All right, now let's get right into the video. Before we get into the charts, the first lesson I want to go over is when everybody is bearish something, see where they're going to be wrong and where can you be bullish. For example, the S&P 500 and the NASDAQ sold off on Tuesday pretty aggressively, and everybody was talking about the world was ending, we're going to continue selling off, we're in a correction. Everybody was so bearish, and everybody was swinging puts. Now, when I see this, a red flag goes off in my head because I know that the market is designed to trick these traders at all costs. The market knows where you're trading at, and they're going to put you in the max pain for them to make the max gain. For example, here we have NQ. This is the NASDAQ 100. On Tuesday, July 27th, sold off, let's just call it 300 plus points. Now, at this point, we put a head and shoulders pattern at the high, we created supply, and we had an aggressive sell-off before bouncing into the close. Now, at this point, everybody was so bearish, they thought this rally was going to fail. Overnight, we were going to open up and sell off the following day. Granted, the current context of the week was earnings, major tech earnings, and we had the Fed speaking on Wednesday, the day after. Now, think of when and where you can profit off of others' greed. Do not follow the crowd. The market will move and hunt traders' stop losses or where they're trading at to put them in the max pain for others to gain off of. This is why in my pre-market plan on Tuesday on the NASDAQ and the S&P 500, we had key demand zones that must have been defended. Now, I post these plans every single day in the Discord. The first one I do want to go over is the S&P 500 because this is going to set the tone for the majority of the other equity setups that I do want to go over. So this is the sell-off on Tuesday. Overnight, we moved up and traded sideways in a tight range. The market opened up or close to the open, and you had everybody I saw on Twitter, on different chat rooms, saying they're looking to play puts on the market because the world's going to end and we're going to continue to sell off because of the current economic conditions. Now, I said in my pre-market plan, very strong recovery. So any pullback into the demand / lows around 4389 and a quarter and 4372.5 should get defended from buyers where I will look to play calls. I was not once bearish at all unless we came into the supply zone and rejected, or if we got below demand without any signs of buying. This goes with ES and NQ, and this is going to set the tone for the majority of the trades that I took this week. Now, another setup from the pre-market plan was NVIDIA. This was my top watch. We had demand at 190 and 36 cents and 189.28. That if we pulled back into, I would play calls, or if we could break out above downtrend resistance, above the 197 key area, I will also look to play calls. So I want to go to a higher time frame chart and show you what I saw at that moment. It looked like this. We had a very strong downtrend line. We also, just like the market, created demand at the lows that pullbacks into this level should have got defended. Now I'm going to go to a 1-minute chart and show you the trade that I took. So NVIDIA sold off. Keep in mind, NQ and ES were bouncing off demand as well. And as soon as we came into this demand zone, I was telling members in the intraday commentary tab that I first want to see ES and NQ bounce out of demand before I can play NVIDIA. Now, this is going to bring me into my first point. There's two different, the second point, there's two different ways we can interpret this. So the first one is hesitation where we don't have proper confirmation yet. And the second one is hesitation when we do have proper confirmation, but we don't have conviction to put the trade on. For me, with this NVIDIA trade, I had hesitation because the market wasn't giving me my confirmation signals yet. It wasn't because I didn't have conviction. I have strong conviction because I know supply and demand, my edge will make me money in the long run. So with day trading, it requires you to be laser focused to the charts and do what the market is currently telling you. The second you hesitate is the second the market will move in your favor. And the second the market moves in your favor and you miss your entry, your risk to reward is skewed. And any second or minute after that, you are going to be chasing. And I guarantee you the result is not going to end well. So have conviction, pull the trigger when you get your confirmation signals, respect your risk. And that's the only thing you can do as a trader. No one knows the outcome. The only thing you can do is manage your risk, confirm the trade, have conviction, and put it on as stress-free as possible. So Nvidia came into this demand zone at the same time ES and NQ came into demand, and ES and NQ really did not find a bid just yet. If we pull up NQ here, it took a little while for it to bounce around 950, 955 before it came out of this demand zone. So Nvidia took a little while longer for it to bounce, and I did not catch this first rally to the upside because I didn't get my confirmation signals. Instead, at 956, at this candle right here, once we consolidated and based above VWAP, I love seeing this sign right here, especially above the 192 level. I took this long in anticipation that we had that wedge break trend line up here, along with the 197 key level. I got the 195 calls at $1.70. Then we started consolidating, and then we started pushing up. And again, remember what I said in the beginning of the video, when everybody's bearish or when everybody's on one side of the market, think of what you could do to do the opposite and not follow the crowd. And at 10:08, this candle right here, when we broke the high a day, I got out my full position at $2.30 for a quick 35% gain in a 10-11 minute period. It was a quick trade. Now, the reason why I scaled out was I saw a very heavy volume coming in above high a day. And if we did not have any more buying or demand being created to the upside, this would have been a failed breakout and we would have consolidated lower. Eventually, we hit this wedge break and it actually acted as resistance before moving up end of day. But I'm never going to complain about a quick 10-minute trade to make 35%. Although I missed demand. Now, if you caught it at demand like some members did, this would have been an 80-90% trade. However, it did not fit my style and the confirmation signals that I do like to see. Now, at the same time, Tesla also made the same move. If you look at all the charts on Wednesday, they all look identical because the market bounced at demand while majority of equities had the same demand zones. This is why it's very important to make sure that the market is in agreement with your analysis, with your thesis, or whatever you're trying to trade, as long as it's a market leading stock. So we want to see a strong market and a strong equity for the highest quality of setups. If we see ESNQ coming into demand while an equity is coming into demand, it's a pretty good setup. Or if we see the market breaking out and other equities following suit, it's going to be a good setup. Posted this in the intraday commentary tab where I update my thought process throughout the day. I said we had demand at 639 and 634. I'm watching to see if we could put in a higher low here to play calls, only if NQ could hold up and turn bullish. If it's weak, I'm avoiding. And then I said I always see if the market validates my analysis because the majority of these equities follow what their parents do, ESN and Q. For example, Tesla, Nvidia at demand right now. However, I need to see ES and NQ bounce out of demand, and then we could take a quality setup. So here's the Tesla demand at 639.35. We came into the zone and bounced. Eventually got above 650. This was actually the play for tomorrow. But we bounced off this demand zone, and it was good for about 15 or 16 or so points. Now, another point I want to make here is if you were to look at these charts, like I said, majority of the things happened at the same time. And psychologically, people think they have to hit every single setup that triggers. Find something that's quality for you. Nvidia, Tesla, Apple, NQ, what else? The S&P 500, they all came into demand at the same time. And at this point, you have to figure out what looks the best for you and take it. If you made money on SPY and didn't take the Nvidia trade, who cares? You're not going to hit them all. They all happened at the same time. The only thing that matters is if you followed your plan, you respected your risk, you traded without emotions, and you made profit. If you didn't make profit, you brushed it off and focus on the next best setup. ES from the pre-market plan as well hit the 4405 supply zone after moving up after Powell was speaking, and rejected the supply zone and moved lower. Now on Thursday, since Nvidia did bounce off demand and have that rally, we had buyers factored in, and we wanted to see those buyers show continuation to the upside. This is something that I added to the course about a month and a half ago about new buying, new selling, and knowing your competition. It fits this trade perfectly. But we wanted that. We created a new demand zone at 192.94. I wasn't the biggest fan. However, that trend line and the 197 key level, if NQ and ES is strong, this could work. And I'm going to look to play calls targeting the 198.50 and then 200 area. Now, this was a setup not from supply or demand. However, I branched it because yesterday's bounce was off that demand zone and we had buyers factored in. So buyers down here, for them to get rewarded and show effort, we would want to see volume, volatility, to break to the upside above the 197 key level into the 198.50. And on the hourly, again, this downtrend picture, we poked our head above it on Wednesday. And then on Thursday, what I liked about this was we opened above it and we came back down to test it. We had some nice lower wicks, and then we started curling to the upside while the ES and the NQ were strong, and it was pretty close to the 197 key level. And at 9:35, show you what the candle looked like, just like this. I played the 197 calls at $1.35, anticipating that we were going to break above the 197 key level into the 198.50 area, all because those buyers yesterday were factored in. And for those that have been following me, the best trades usually are the ones that work out right away, where we have strong volume, we have participants, and I get in during the move, but I get in before majority of retail does get long. Even though the plan was to wait for above 197, I recognized what the market was currently telling me, and I was comfortable getting in prior with my stop loss below 194, this area right here where the lower wicks were. So then we started moving up, and as soon as we got above the 190 or the 197 key level, and it looked, this candle was once a red candle to the downside. It looked like we were aggressively selling off about 75 or so cents. I got out my full position at $1.90 for a 41% return in a 3-minute period. So I like getting in before majority of retail does, and I like selling into strength when I know majority of the traders are looking to long the market. That's just when I get the best bang for my buck. And this thing did continue to move higher. I'm not going to complain about how much I could have made. I followed my plan. I respected my risk, and I did what I had to do. Eventually, this came up right into the final target at 198.50, and we just consolidated sideways and really did nothing. This is FOMO hours that I've discussed prior. This is where you're going to get caught up in chop. Now, Tesla was another good setup. I did not take this. From the pre-market plan as well, nice bounce off the demand zone yesterday. Buyers factored in. I wanted to see a strong break above 650 for continuation into the 665, 669 area. So just like that Nvidia trade where we bounced off demand yesterday, we had buyers factored in. So I wanted to see them get rewarded to the upside if they showed any effort. Now, of course, we opened above the 650 level, and looking back in hindsight, it acted as support. But we came below it, and when we did break above it, I did not play calls. It just happened so fast, and it was in the first 2 minutes of the market open. Eventually, we did come up. I know members did take this trade. We pulled back, and VWAP, I love seeing VWAP angle up like this. It means volatility is coming into the market, and we did have a nice rally. Now, looking back in hindsight again, and looking back to what we can use to improve for future trades, this thing did flag. So one thing I do want to mention is the market's never going to continue or shoot straight up and continue running forever. It's going to have to cool off, take some profit, consolidate, base out, create new demand. I like when it does it above VWAP. We started flagging, it hugged VWAP, volume started coming into the market, shows signs of accumulation, and then we got that quick push up. This could have been another valid area to get long. I did miss this trade. And at this point, I'm not chasing all the way up here because a pullback skews my risk. My risk is higher than my reward if I'm targeting the 669 supply zone. And eventually we came into the final 677, 680 supply zone by afternoon, and then just consolidated. Really no trades after that. So this is where your emotions will get the best of you. It's FOMO hours. The best setup happened in the first hour and a half, 2 hours. And after that, if you're late to the party, you missed your entry, you're skewing your risk to reward, you hesitated, and you're not following your plan. Also on Thursday, really nothing on the NASDAQ. The first 10 minutes just straight shot up into supply. We tagged it and was very, very choppy all day and very tough to get a setup on this. You're more prone to trading balanced markets and forcing setups and taking losing trades that are avoidable. And then we did sell off into this demand zone. The S&P 500 though on Friday overnight had a very clean bounce off of this demand zone from that sell-off, just like NQ. And this formulated supply where we hit it, I did not take this short. I personally did not have enough confidence in the zone due to the overnight buying, due to everybody being bearish. This did work out. It's a setup I missed. It happens. But very nice trade for those that did take that. And besides all that, I think it pretty much summed up everything I did want to go over for Wednesday, Thursday, Friday. If you did enjoy it, drop a like on this video. This is how I trade every day. Definitely, if you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. It's a very good, active, and engaging community. And besides that, be sure to follow me on Instagram. And I'm going to end it here. Have a good weekend. Peace out.